Lake Resources, a company with the rights to 4 different lithium projects, all located in the heart of the lithium triangle in South America. As a reference, the world's 5 largest producers of lithium all have operations in this triangle. It is safe to say this is a really good spot to start a new lithium project. And well, this company, trading under these ticker symbols, was recommended by one of you guys. So welcome to another installment of Analyzing Your Stock Picks, the series where I, analyze your stock picks. Let's first dig into a company overview, and then let's also squeeze in some risk factors to look out for. Let's dig into it. A company overview. Remember how just now the company was flexing with their 4 different lithium projects? Well, they were lying to us. In fact, the company actually has access to 5 different lithium projects in South America. And that makes the company look pretty well diversified and also pretty mature, which they aren't. The company is still a pre-production company. And for now, the company only has grand plans for the future. And all of their grand plans seem to revolve around this bad boy, the LKE project. Lake Resources aims to scale this property up from a demo plant in 2022 all the way up to a 50,000 ton per annum output by 2024. To produce that magic 50,000 tons per year number, they hope to construct this processing plant, which is basically a huge factory, where they take lithium brine or lithium water out of the ground, extract the lithium from that brine, and then deposit the earth juices right back into the ground. And that process is quite different to how other companies extract lithium from lithium brine. Other companies actually let these earth juices evaporate, and that leaves the lithium behind. This process is, as you can imagine, quite water intensive and not so friendly for the environment. Lake Resources is built different, since they deposit that brine right back into the ground, with the only difference the extraction of lithium. Important to note, the company is, as we speak, scrambling to produce their DFS or Definite Feasibility Study, which will be significantly different compared to their earlier PFS or Pre-Feasibility Study. Their PFS was constructed with a 25,000 tons per annum output in mind, while their DFS will focus on a 50,000 ton per annum output. Moreover, their PFS was quite favorable already, with an internal rate of return at 35%. Only a $544 million CapEx or capital expenditure, and a predicted annual EBITDA or earnings before interest, taxes, depreciation, amortization of around $360 million. And even the funding of the full 50,000 ton plan seems to be almost a done deal, with the UK Export Finance and the Canadian EDC having shown an expression of interest of up to 70% of the total funding required, including the expansion plans. This would be a debt with a maturity of around 10 to 11 years and an interest rate of around 3%. These numbers are nothing to sneeze at, especially for a startup like this company. These export credit agencies are putting a lot of confidence in this company if the deal goes through. Keep in mind that expression of interest was all the way back in August 2021, and today the world has changed. Interest rates are skyrocketing. Investors are being pussies and they are fleeing to safe assets. And let me tell you, a pre-production company isn't seen as a safe asset. Time will tell whether Lake Resources is able to get this deal through. So that is the company overview, really. LKE, the flagship property, should go up to a 50,000 ton per annum of lithium production per year by 2024. But we are still awaiting that DFS or Definite Feasibility Study, so that is for sure something to look out for. Aside from that, the company hopes to take its other 4 lithium properties, combine their might as if they were the freaking Power Rangers, and take the total production of this company up to 100,000 tons per annum of lithium products by 2030. On the short term, you can expect that DFS or definite feasibility study around Q3 2022. Their demonstration plant should be operational this quarter already. We can also expect a financing update around Q3 2022, and construction of that 50,000 ton per annum processing plant should start around Q4 2022. Exciting milestones on the short term for sure, and really, if the company is able to get their financing deal through, the sky does seem to be the freaking limit. But not everything is sunshine and rainbows. Now let's talk about the biggest risks. Risk number 1, financing. This financing package of up to 70% of the total KACI funding required. This is a true make it or break it situation for Lake Resources. If the company isn't able to strike a deal thanks to the increasingly worsening economic environment, or if the company settles itself with a significant interest rate burden, well, that would suck for your investment in the company. So that is for sure something to look out for. You do want this financing package to go through. Risk number 2, the other 30% required for the KACI project. Where is that money supposed to come from? The company, as of the latest quarter, holds roughly 110 million Australian rupees. But this figure surely isn't enough to cover the enormous cost associated with the KACI project. So most likely the remaining 30% of the funding required for the KACI project will need to come from you guys, the shareholders, and most likely through equity, which means dilution. And well, the Lake Resources share price isn't doing so hot right now, with a 73% decrease from its most recent high. So if you are a shareholder and the company does start diluting around their most recent lows, well, that would be a recipe for equity destruction on your end, which is for sure something to look out for. Another risk to look out for, the former CEO and founder of the company, Steve Promnich, has left the company around June of this year. As far as I can tell, we do not have a reason why he has left the company so suddenly. Although since his departure in June of this year, he doesn't seem to have sold any significant chunk of his shares, at least as far as we can tell on this date. To me, management and especially founders leaving a company is a big red flag. A red flag basically on par of dating a Tiffany or a hairdresser. Not a game changer in and on itself, but it is a sign that the girl that you are dating might be hella crazy. And of course, aside from those 3 huge risks, the company has plenty of other risks as well. First of all, you are investing in a pre-revenue company, which is super risky in and on itself. Second, you are betting on lithium prices remaining high for years to come. This is something that I'm personally not that convinced on, since a lot of lithium projects will come online between now and 2030. To me, it seems that a huge chunk of this supply deficit in lithium will cease to exist on the medium to long term. Therefore, that bet on lithium prices remaining high is also pretty risky. However, the company is working towards really low operating expenditures, so most likely the company will still be profitable even at low lithium prices. Like a wise man once said, it literally cannot go tits up. Sorry, that was a lot of doom and gloom, but the company isn't entirely Dark Knight either. This picture is actually very bright. Quick napkin maths. $360 million of EBITDA at 25,000 tons per annum, so that would be at least $500 million of EBITDA at 50,000 tons per annum. $500 million in EBITDA at about a 10x multiple, which might be high, might be conservative, but that would mean somewhere along a $5 billion market cap. That would be about a 7x increase in market cap by 2024 compared to today. Assuming a significant chunk of dilution, maybe a 4 to 5x return on your investment. Not bad at all. But now your job begins. How does that quick and dirty 4 to 5x potential scale with the potential risks? Does it seem like a good opportunity? how realistic are the risks that I have penciled out? Moreover, how realistic is that quick and dirty future return that I have sketched out here? And most importantly, how amazing is this opportunity compared to all the other opportunities that you have found? Food for thought. Best of luck in your research and investing journey. Oh, and before we go, please do recommend your favorite stocks down below. Without your recommendations, this series will cease to exist. With that said, thank you so much for watching. I love you all. Peace.